In this video, we will discuss supply and demand zones. The markets are composed of two players, the market makers and retail traders. The market makers are banks and financial institutions. These players are the most active participants in the market. They generate millions of dollars trading every single day. They influence, control the market, and drive prices. Technical analysts at these firms are the top notch. They know how retail traders analyze and trade the markets. They understand that most players in the markets are participating with insufficient knowledge, all hype. They know where the majority of people place their stop losses and profit targets. They know the most popular patterns. They have the financial and intellectual resources to push the markets up and down as they will. They are the aggressive buyers and sellers. They are the passive sellers or buyers as well. They can absorb momentum and cause the market to halt. They have certain zones though, where they buy and sell from in the market. And in this section, we're going to learn how to identify them so that we can trade with them rather than against them. We will call these zones in Prophet X supply and demand. These are not regular forms of support and resistance. They are critical zones that market makers and well-informed traders buy and sell from. The strategy that I'm going to share with you today is an A strategy, and most of my A+ moves comes from trading these zones. They have a high win rate. This strategy has a high win rate and offers a high risk to reward. This is one of the most critical sections in this course. If you become proficient trading supply and demand zones, you will be able to trade anything in the market in different sessions and make money. Stay tuned. Let's get into it. So we're going to start this by first looking at what is called the demand zone. If you look at the market here, the market was trending downwards. And at this zone, there were strong buyers here that absorbed the supply and halted that move downwards. And they not only absorbed the supply, absorbed that momentum, they pushed the market higher by aggressively buying. Remember, there's only one way to push the market up or down, and that's through aggressive buying or aggressive selling. Limit orders or passive buying or passive selling can only absorb the momentum. But when the market goes aggressively in one direction like it is here, when it buys aggressively, that lets us know and other institutions know that there's a big buyer here that is interested in pushing the market higher. Now, when that happens, we are alerted. We'll learn how to be. And other institutions are alerted that when price comes back to this area, there's a high probability that that same buyer and other big buyers will be waiting to buy aggressively again from this area. Now, why, again, let's talk about this. Why don't the big institutions, when they want to buy at a certain price, why don't they buy all at one time? The reason why is because they want to buy low. They want to buy at a good price. Remember, if the market is pushing high like this aggressively, they're acquiring all of the supply along the way. And each time they acquire supply, they're paying a higher price as they knock out all of the offers. So the price that they paid here is much different than the price that they paid here. It's much higher. So if they want to rally the market and make the most profit, it is in their best interest for them to buy down here. So when we see the big giant move here, we're going to learn technically how to identify this zone. There are some more nuances here that I'm not mentioning, but we want to learn how to identify that this is a demand zone and that it's a high possibility that there's a big institution here that will buy again once price comes back to this zone. So when price comes back to the zone, what do we see? Strong rejection and a massive bullish candle. This means that there are huge aggressive buyers here that started to buy And most likely this will continue up, giving a high risk to reward. So if we were to enter this trade, we would enter here, stop loss below here, take profit up here. That is at least a 1 to 5, almost 1 to 6 trade. Beautiful R&R. So these are the types of trades we want to be in. Let's look at the supply zone. So the supply is the sell zone. This happens when a large seller aggressively sells their shares, aggressively sells their orders. So when we see massive sell candles like this, this is a sign to us and other well-informed traders, other institutions, that a seller is going to sell aggressively from this zone. So once we see the massive move down, we're not entering sell down here. We are waiting for price to return and give us a sign of entry. Here we have a bearish pin bar. We have an evening star. These are all signs of rejection at this sell zone and that we are safe to enter into a sell. So you see, price comes back up to this zone, massive sell down, beautiful risk to reward. If we were looking at market structure, some people may look at this on the 4 hour. This is US 30. They may look at this on the 4 hour and see a double bottom, see a break of structure. But us as supply and demand traders, we're seeing through a different lens. We're seeing through a different perspective. So we know that the supply zone in the 4 hour time frame will override a lot of what we see here. So we'll be waiting for price to return to that zone, give us confirmation, and then we'll shoot. Now, if this is a big seller and they have a lot of shares, they don't want to sell at a bad price. So remember, in order for the market to move down, there has to be an aggressive seller that is taking out all of the bid offers. So as this person is selling aggressively, searching for more bids to consume, the price is going down. They're selling at a worse price as it goes down. So they won't continue to sell and continue to sell as price declines because they'll be getting worse offers, because they'll be getting worse bids for their supply. So they'll wait until the market goes back up here and then they'll sell again at a better price. And what you saw here is another sell of their orders. So 1, 2, 3. So 2 massive opportunities for selling. These are very high risk to reward opportunities, as well as very high probability because we are trading with the banks at this point. So this is an introduction to the supply and demand zones. We'll get into these more now in detail so you can become proficient at trading these, start to boost your profits and pass those challenges.